Hi there, welcome to Grain TV. It's Thursday, July 7th, another punishing day in beans. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, beans got crushed again to the downside, giving up 50 cents a bushel, now trading in the mid $10 range. Wheat coming in lower, also giving up 4 cents, and corn managing through all the sell-off in beans to hold fairly steady, only giving up half a cent. News today was pretty supportive for corn. First of all, let's start with news out of Brazil, where CONAB, the Brazilian government's forecasting agency, lowered their Brazilian corn crop from 76 million metric tons in their previous forecast to 69 million metric tons. So that's a big 10% drop, which was very supportive and indicative of more export business coming to the U.S. in the coming 6 months. So that really was what staved off the corn market from really following beans lower, even though beans took it very sharply on the chin. In other news from Brazil, CONAB kept their bean crop estimate for Brazil pretty much unchanged, around 95.6. Also this morning, USDA flash sales were positive, but not enough to really stem the tide of selling in beans. First of all, 120,000 metric tons of new crop beans to China, and 137,000 metric ton deal for corn to Mexico. Most of that for new crop 2016-17, although there were some deals, or some of that business was spread out over old crop as well as 17-18 delivery. Rains are certainly the thing that is driving the market down. We're seeing a pretty good indication that the next 2 weeks will be very plentiful in terms of moisture, particularly in the western corn belt where there has been some dryness concerns. So that has really taken the market sharply lower. There is some potential for heat in the later half of July, but still, weather forecasters say that all this rain that's going to be falling in the next 2 weeks will be very beneficial to the crop, and that's got the market exceptionally excited to the downside. Also, another factor that was driving beans down was the crushing blow that came to crude oil. Crude oil giving up nearly $2.50 a barrel today. There was an EIA stocks number out. That number was not on its face value terribly bearish, but it wasn't as good a number as what API put out yesterday. So overall, EIA, the official government data, showed a 2.2 million barrel drag or drawdown in crude stocks versus expectations of a 2.3 million barrel drawdown. But just the day before, private forecaster API had said their drawdown estimate for the week was 6.7. So a much bigger drawdown projected by API than the official number, and that got the market really spooked today. In conjunction, gasoline stocks were higher in that report, surprisingly, or not as bad as what people had thought. So that was really something that kept the market on the defense, that we were expecting a big drawdown in gasoline at this time of year with the driving season going on and summer vacations, and we didn't see it. And so overall, I think a lot of the bulls threw in their towels today on crude oil, and that sent the bean market down as well. Let's take a look at long-term corn here, because we've seen the corn market really get beaten down, even though today it held up fairly well in light of what was going on in beans. But overall, in corn, this is a long-term weekly chart, and you can see pretty much for the last year and a half, we have been trading in a fairly narrow range between 350 on the downside and 440 on the upside. And you can see how quickly in the last few weeks we've gone from that upside range of 440 down and below that 350 mark, with September, the front month, now trading around 341. So keep in mind that probably the next line of support is going to be that long-term support at 320. I wouldn't be surprised to see us get there at some point this growing season, as long as we see the weather patterns the way they're shaping up, which is plentiful rain, no real significant stress to the crop. We have the crop 75% good to excellent. There's very little, I think, at this juncture to keep this market moving higher until maybe we get past the harvest season and we start to look at maybe some more positive export business. But right now, this is a market that is clearly on the defensive and potentially moving to fresh lows in this move here. So if you have any questions about how we can help you with your own marketing situation, by all means visit us online at grainhedge.com and take a look at our free demo platform to see how GrainHedge's trading platform can be a useful tool in your own marketing situation. As a GrainHedge trading client, you'll get our technical alerts email first thing every trading day.
Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at GrainHedge.com to become a client.